Welcome to the latest stage analysis video. It's Sunday the 13th of November 2022. I'm going to start tonight's video by quickly looking at the dollar index as we had a significant move this week. I've been talking about this one on Twitter for a little while now since the buying climax week here that we can see with the candle there where it obviously made new 52-week highs and then reversed lower. So we hadn't seen that throughout the entire stage 2 run. You can see the stage 2 that started back, what we got there, back in late September, early October time there. This run all the way through for a whole year. So we started to see a bit of a potential buying climax, automatic reaction type behavior, secondary test, started to form a structure, and then we've broken down from that fairly convincingly this week with the most significant bar that we can see on this chart since I think that was the COVID March 23rd week in 2020. So obviously we haven't got any other significant weekly candles like that on the dollar index chart. So this had a major impact on commodities and we'll see the stock market as well this week. If we drop to the daily on this quickly, you can see that a little bit more clearly. So you can see the buying climax, automatic reaction, secondary test area. So you started to form a structure, a little bit of spring type action, but then failed, rolled over and started to break down on Thursday and Friday as the market started to break up. So lots and lots of breakout attempts this week. I think it was the largest amount of stage 2 breakouts that I've seen all year. So the dollar index clearly a big, obviously, reason for that. If we flick through to the individual charts, so this is the S&P 500. So we also had a secondary follow-through day on Thursday. I did see someone say that it was an initial follow-through day, so I'm not sure why they have done it as such, but we obviously had the initial follow-through day back here. What was it? October 21st. And Thursday was a secondary move, but secondaries, the move on Thursday was much more significant. I did the midweek video and talked about this in terms of the amount of 10% moves on this day. So on the 21st of October, were very, very low. I think there was only, from memory, there was only like 30 or 40 or so, whereas we got 600 plus on Thursday on this attempt here, and then we had a continuation on Friday with another 130 or so more on Friday's move of 10% moves. So which is probably the second largest day that we've had throughout probably this entire area since September. I haven't looked through it every single day, but I run the scans each day. So just from memory of noting it, these two are the Thursday and Friday this week were the two strongest days that we've seen for the market for a long time. So you can see that taking us back above this is the S&P 500. So you can see it's taken us back above the 1 ATR level in here. So this middle line in here is the 21-day EMA. So the line above is a 1 ATR above that, and the line above that is 2 ATR above that. So you see we actually closed just around the 2 ATR level, so 39.8870, so we closed at 39.992, so we actually closed above the 2 ATR level potentially for the first time since the last time we had a decent run. So we had a 2 ATR close and run through here through late July into early August. Into mid-August there. So currently we're in a strong short-term uptrend, but within this broader base structure that we've been in for a while now, since we started to form a bottom in May, and then obviously the secondary bottom in June before our spring attempt on October the 13th here. So this is the current run. Follow-through days, 2 follow-through days, and starting to see some breadth expansion. So on the short-term breadth here, you've got percentage of stocks above their 20-day EMA at the bottom here. You can see we're hovering up in the upper range with more than 70% above for the majority of the last month now, above their 20-day exponential moving averages there. So a little bit of short-term breadth positivity there. And I'll talk about the market breadth data in detail later, as there's been obviously some changes in that this week again, and some continuing strengthening across the board there. I have posted some charts on Twitter about it over the weekend, with the, for example, the NASDAQ percentage of stocks above their 200-day moving averages chart. So, and showing the move in that as it starts to move above its key 30% level. So this is the intraday chart using the SPY ETF. So this has got the force index applied. So I've talked about this before in terms of the force index is a good way of measuring effort versus result in as it measures the price and volume move and gives it into indicator form. So you can see here, Thursday and Friday's move showed a strong result. In terms of, we had obviously a strong move in the actual price action itself, but we also saw a strong move in the force index here. So decent volume and a decent move. So the biggest move that we've had in terms of actual force since, well, the entire structure here has been forming. So we're potentially now, if you look at this structure from a Wyckoff perspective, we had the phase C, we had spring type action, moved out from phase C potentially into phase D, and then we started to have some high low tests, started to last points of support, and started to move up. So we're potentially in phase D of this structure now. So we're continuing to look for a sign of strength, although we might need to, with such a big move over the last, obviously, Thursday, Friday there's a good chance we're going to need to consolidate and pull back in a little bit. So if we do get a pullback, we want to see it hold the near-term levels in here, so, and then start to move back up for a potential sign of strength rally, and at that point a potential stage 2 breakout attempt if we do start to get back up into there, as we are currently now potentially in stage 1 again in multiple markets. So we could still obviously fall over and return back to stage 4 behavior again, but again, a little bit later in the video I'll show you why we're obviously in stage 1 at the moment, as you're not only using index charts to determine the stages, we use the market breadth and we use the industry group data as well, and sectors, etc. So if we look at this is the weekly chart of the NASDAQ 100 using the 100 E-mini futures. This has got the SATA, so the stage analysis technical attributes indicator, applied to it in the 3 different ways, same as we had on the dollar index chart at the start there. So you can see this, we had an engulfing candle this week on the weekly chart, so significant weekly bar there. You can see the stage analysis technical attributes has improved. We've gone from a 0 up to a 3 over the course of the last week, and you can see when it's in stage 4, you tend to be below the 3 level and tend to be in the lower end of the range, down between 1 and 0 for the majority of the time. So throughout the entire stage 4 decline down here, you can see we've basically been in the lower range here with only a few little pops. So this change of behavior here, which started to show the change to potential stage 1 type behavior in the initial point of the base. You can see it popped out above the 3 level. We got all the way up to 6 briefly before it topped and came back in again. So now we've got a slight change of behavior here going on. We've got to move back up to 3. So you can see the red has slightly got a little bit lighter. If this improves up to a 4, it will turn blue, etc. And then once you get up to a 7, so once we get up to this point up here, it then would turn to green again. So starting to see that in some of the other markets. So the Dow is in a better position than the NASDAQ here. So if we look at the YM futures, that, oh, wow, blimey, done it wrong. Go back. Damn it, I lost the page. Go back. I can do it through this one. So YM1. That's what I was looking for. So if we look at the weekly chart of the Dow here, you can see it actually in a much better position. So you can see the range. We've had that spring type action, terminal shakeout as it moved lower. obviously made a stage 4 continuation and then quickly reversed with that spring type action. We've had some strong moves higher, and now it's getting back towards the top of the range. I think I measured on Friday that it's within 2% of actually the stage 2 breakout level now in the Dow. You can see the technical attributes has got up to a score of a 7. So the Dow is in the strongest position of the different indexes. The S1, which is the S&P 500, you can see slightly better than the Nasdaq. Again, we've got a SATA score of 5. So again, stage 1 type behavior in this one at the moment. Again, the spring type action starting to regain that 30-week moving average. The 10 weeks still below the 30-week moving average low, so we need to see that improve. But as I said in the earlier part of the video, we'd like to see this start to pull up, start to show a sign of strength, and then potentially you could push up and out into make a stage 2 breakout in that case. What other index we want to show? IWM. Let's have a look at the Russell quickly. Russell 2000 also back above its 30-week moving average here. So you can see, again, similar to the S&P 500 there, we've got a SATA score of 7. So again, a bit stronger than the S&P 500 there. So at the moment, and not too far from the potential stage 2 level either. So multiple indexes are now in stage 1 and within striking distance and moving into stage 2. If we go back into here, Nasdaq Composite here, you can see we've got back above on the daily chart. Two closes above the 50-day moving average on Friday. So following the spring type action through here, and follow through day attempts, now secondary follow through day attempt on Thursday. So again, same as the S&P 500, a little bit weaker still. You can see relative to the zero line here, it's still fairly a long way below there. So percentage wise, I think it's lagging by about 5% or so, maybe even a little bit more than that. We've still got a look at the price action to the 200-day moving average. There's still a 7% move needed just to get back to the 200-day moving average in the Nasdaq. Russell 2000's already at its 200-day moving average low, so we're looking for this again to push up towards the top of the range, and then it could potentially then make a stage 2 breakout. You can see it's outperforming versus the S&P 500. It's above the zero line, so it remains one of the stronger areas of the market at the moment. QQQJ was another one I wanted to show. So this is the Nasdaq second 100 stocks. So this is an ETF. So this shows more of the mid-cap Nasdaq type stocks. So you can see with similar kind of base structure that we've seen throughout the major indexes. We had the upthrust action, we've had the shakeout at the bottom of the range, high-low test, started to move back through, follow through day on some stronger volume, and now pushing up, and it's obviously getting much closer to its 200-day moving average. So compared to the Nasdaq Composite there, this is only 2.8% or so away from its 200-day moving average there. So within striking distance, within a day or two, if it continued to be strong. But we've already had a really strong move over the last few days, so potentially it could need to pull in a little bit. If we look on the weekly chart on this, you can see obviously the deep stage 4 decline that this has had since the stage 4 breakdown. So we started to build a base structure through here, even earlier if you take it from the May low there. So starting to move up and out, potentially could start to move into stage 2 through that kind of area. It doesn't necessarily need to break above the August highs to move into stage 2 at that point. So it could make a relative to the moving averages. So the VIX continuing to improve as well. So you can see the volatility has been coming off below the 200-day moving average. I talked all the way through September and October about the need for this to start to tail off and get underneath this 200-day moving average. We started to get that divergent behavior through here as it started to move lower, and then it's just continued down while the market, the S&P 500, has started to move up as well. So starting to move back in line again, but we're seeing this moving into a more positive area.